back to this channel. So today I'm going to share a video of trade breakdown that is similar to what I just took yesterday. So the concept is the same, the checklist is the same for all trades. So I'm going to show you how to catch such trades. So like in this one, and target at least 1 to 6 there about. So let's see how it goes. So this is 1 to 5, so maybe we can expand it to 1 to 6. So let's place 720. I like 1 to 6 the most. So this becomes, and I do market execution, so 12 pips is enough, though you can place it with a stop loss there about. That is the highest stop loss you should be having, but you just need to give it room for the market to also have time to equally breathe. I will explain why. So a 1 to 6 would be a very nice option for this. So the market moves as we can see. Then let's see, when we, here we go, take profit smashed very early. So this is the trade, and this is the criteria for checking the trade. This is exactly a similar trade that I was looking at yesterday, and it did not play out exactly a 1 to 6. I always like 1 to 6. If my high, if the 1 day high can give me 1 to 6, there's no problem. If it can't give me, then I would target somewhere here, a 1 to 6 or 1 to 5, depending on what it wants to show. So that is the trade. It did not play out. Eventually it went to break even in the morning session. So this is how it played out, and then it took me to break even. So that was the trade. So let me do a detailed analysis of this trade using this checklist. The checklist is for the swing strategy. If you want me to shoot video of the day trading strategy, then also do let me know, so we can begin doing the analysis for this particular trade that I was actively looking at. So we can start everything afresh. So we can start everything afresh. So we start from the daily time frame, because that is what the strategy says. You start from the daily time frame. Now if you look at this market, it has been trending on the downward side. Just check, we don't mark so many things. As you can see, my chart is very clean. Just look at the trend of the market. So ideally this market has been selling. So this was the market, it has been selling, it is on a downtrend. So whenever there's a pullback like this, we look for trade. Pullback, we look for trade. Pullback, we look for trade. So we look for a trending daily time frame, direction close opposite. So this is a down market. Now we look at it. What does it do? It closed on the opposite side on this day. So it closed bullish instead of closing bearish. It closed bullish. It means that 4 hours was actively seeking liquidity on IDM and other liquidity points. So we mark the daily high that we want to trade from, and this is the low, but eventually this is the right low to, if you want to hold for long. That is why this thing is a swing strategy. But then now you'll have to have a very big stop loss, or you'll have to have a tight entry. So let's give them 2. So this is the first take profit and the most ideal one, because the market can tap here and then now reverse upward. So the goal is to get at least a 1 to 4. If we can get it, the better. So if you take using the risk entry that I just explained in the previous video, it is better to hold until this particular point, and it will take like 2 to 3 days if it will play out. So we go to what time frame? We go to 4 hours time frame, because the strategy says first 4 hour aligning confirmed. So the 4 hours must align. It means 4 hours must take this low. After taking this low, that is the meaning of 4 hours aligning. So like you can see from a market point of view, using SMC, so the market took this this IDM here on 4 hours. This is an inducement, and then what did it do? It caused some change of character. Can see this is internal change. Actually, yeah, the change of character happened exactly somewhere here. This is exactly where the change of character happened. Or somebody may ask why. Because the market actually we can even call it from this point is still okay, because the market moved up then pulled down. This doji candle here or inside bar or IFC candle did not take any high or low. So if you go to 15 minutes and 30 minutes, this is just pullback. Then this was a push, and then now we have a push down, a push up actually, and then a push down, and then a push up taking another inducement, and then a push down, and then a push up, and then a push down, and then this is now just another inducement. So what do you expect? We expect now the market to move like this, but we save ourselves that stress by using this simplified strategy that identify all these things for us. What we need just to wait is to wait for a daily time frame in a trending direction to close in the opposite direction. So this will be the right place. If the market takes that low, sorry, automatically the market shall have shifted bearish on the 4 hours. So as you can see, the market opens and immediately takes the high and the low of this, which makes it high probability. So if you want to hold for long, it is good to take risk entry. That is what I'll be doing in future after I've garnered a lot of capital from prop firms and personal trading. So this should be your stop loss, exactly 27 pips, and then you get market execution. This would be very early in the morning, and then you target these lows, then you hold for some time. So you can even hold to a maximum, you can do even 1 to 6, but now you'll have to be trailing your stop loss. And I think the market reached there, but that is not the goal. The goal is to take this as your eventual take profit. And as you can see, the market, I think, pushed there eventually. So you can see the market even went further. When the market aligns, it's always moved very, very fast. So that is how I was able to coin this strategy personally. It is a strategy that is not there in the internet. This is the only channel you're going to see it, and maybe from other people who follow me in Telegram group. You can join, by the way, it's free. Then you join me, we trade together. Like this one I caught also. This one was small, so I was trailing it, then I got stopped out somewhere there for a 1 to 3, and I was comfortable with that because the other trade was really playing with me. So I didn't want to give the market some few coins that had just garnered. Now from this strategy, there are things that I have not written here, so many, but this is the general overview of the strategy. So basically, if you see, the market has already even pulled down. So if this market takes this high, it may not pull back again because there's no space to be pulling back down to. But that is not important. That is just other information that I cannot write here. It will make this strategy very bulky for no reason. So we go to 30 minutes because the first 4 hours have aligned. So we go to 30 minutes to look for V-shape aggressive manipulation. But like I said, since the market has taken liquidity on this side, and then again it has taken liquidity on this side that we needed to take. So what happened is that it first of all, this market closed here. So it started by taking liquidity on the upper side, and then now came back and took the liquidity on the downside. So it has no business going down here. That is why stop loss can be as tight as this point. But if it has not taken this high, it means it can still raid it. That is why the stop loss would have to be somewhere here for risk entry, like the one I took yesterday, because when the market closed, I took risk entry because where is it? Yeah, this is it. So you can see the market, this market, of course, it came back and closed here. This was just confirmation that now we are bullish, but it did not take the lows of this and the lows of this. If it had taken the lows of this, then I would have a tight stop loss. But since it had not taken the low of this, that is why my stop loss was somewhere at this 1 day low. So let's proceed. So we go to 30 minutes to look for this pullback. At least we need to get some pullback. So option number one, if for example I wanted to take risk entry, I would just see the first reaction to see how the price is moving. So let's say, for example, let's delete this. We don't mark so many things in our in our analysis. I like to make it simple. So this is our overall target, this daily low. This is our overall target, and then this is where we have our extended version. So even if the market started by taking the high of these previous days, high, there's no problem. That is just building more liquidity. This would be buy side liquidity. Now we'll be targeting sell side liquidity. So let's see what the market does. Immediately it opens, it tries to push back, creating a doji candle. That is a push down, and then immediately it pushes down. So if you are still aggressive, you need no more confirmation, you can take it, because the market is likely not to pull back this side. It has taken the liquidity of this side. At the same time, there's no more room. If this candle here was having a lot of imbalance, that is what makes the market to pull down. So this would be a stop loss of, let's say, 15 pips. So this is the right stop loss, 16 pips, and then you target a 1 to 5 or 1 to 6. So if at this particular point I'm getting 1 to 4, like I said, I always like to extend with one risk to reward, so that I can get it at least 1 to 5, and that would be so nice. So that would be a 1 to, I needed to add 2, so that would be a 1 to 5. To add one more, sorry, I needed to add one more. So don't mind about the noise, it only proves that I'm a human being, I'm not staying in the jungle. So that should be 1 to 5, and then the alternative is to just wait for the V-shaped reaction. V-shaped reaction is this. So we get a pushback, that is, the order is filled. Sometimes it does not get filled, but this one is filled. Then we try and see if we can get a pullback. So I would personally like to see a pullback, like that is a pullback now. At least the market has shown me that it wants to pull back. So I would now after starting pulling back, now the next thing will be to wait for 30 minutes full body closure candle. So I would go, as you can see, that is a candle that has closed on the bearish side, and like I said, I was not expecting a lot of pullback. So you can take your risk, and target at least a 1 to 4. So that will becomes the entry. Now you can take it here and stop loss here for 5 pips, but just know that this thing is not full. It is not a fully developed candle. A fully developed candle is the one like this. This is what I would take it from this point and have stop loss very tight like this. But if it is a doji candle like this, you give it room to breathe. So that would be somewhere on top here. So you can have 11 pips stop loss or 12 pips stop loss. Market execution, and then you target a 1 to 6, for example. Target a 1 to 6, and then now see how it goes. So what is the remaining part? SL few pips above or below the 30 minutes candle. So few pips below this would be above this 30 minutes candle that has just closed. The alternative is to wait for another big candle, by the way. So let's see. If you wait for another big candle, now that is good. So if you want that big candle as your entry, that would still be okay. For more confirmation, so this would be an exact entry, stop loss just below it, especially if it has taken both sides liquidity. But that does not mean that it won't pull back. It can pull back, obviously. So this would be you target a 1 to 5. Like I said, a 1 to 5. The only reason why this one is giving us a 1 to 6 is because it has a tight stop loss, and a 1 to 5 is already here. This is 1 to 5, so we can add another 1R on top of this one to get a 1 to 6. So with that one, there are so many options that you could have taken this trade, and then now we wait and see. So as you can see, the market takes that and immediately it tanks down. So all of them were successfully fulfilled. The best one was this is the one that gave a high risk to reward, but it was the riskiest. This one was the second riskiest, because the market would have still pulled back to some of this point. So this is the first risky one, then this is the second risky one, and this is the highest probability one. This is the highest probability one because the market has pulled back and taken liquidity of this side, taken liquidity of this side. So you just get your market execution and then you call it a day and wait. If the probabilities are on your favor, it will work out. So this one is the most accurate one of all. This one is the most accurate one of all of these trades, as much as all of them played. Now if you want to hold for long, this one was the best one for holding because of bigger stop loss, and at the same time it has so many room, it has enough room to breathe. Immediately the trade goes to 1 to 3, we break even according to this strategy. Break even, TP above the below, at least 1 to 4 RR at BE 1 to 3. So this would be the trade. So this would have been the trade, and then this ones now we are assuming that should have been out of the trade if you are scaling in multiple position. But on this 25th day there were trades on all these pairs. That is why I didn't even look at this one. There were trades on this pair, so I only take 2 trades in a day, the one that played out. Today I did not have any trade, so I was just I'm just free doing my other things like shooting this video. So I've shot 4 videos of that day, of the 25th only. I've shot 4 videos. The one for this week I'm going to shoot next week. So as you can see, the market even went further and further and further. So if you could just be trailing stop loss, immediately this was taken, you will start trailing stop loss, and as you can see, the market even went 1 to 10, and I think it even went more if you are not trailing too deep on it. I think it even went more. So but you should expect a deeper pullback. Whenever such market moves like that, you should always expect a deeper pullback, because you are not the only person who is interested in this market. Even the buyers are interested in liquidating some of their positions. So that is why there must be pullback. You should always expect pullback, especially in after every 4 hours closure. You should expect a pullback. So the pullback is what fuels the market to move in the direction you want, because it even entices others to join in the trade and then be liquidated. So let's stop there and see how many pips did it move. So this is already 1 to 16, 1 to 17, but that one is too much. That is exaggerating, and you may not be getting that all the time. Otherwise, the ideal stop loss was supposed to ideal take profit is supposed to be here for a maximum of 1 to 6. If you took it from this point, it also still gave you 1 to 6.